Hi, this is Essie. In this video, we're going to talk about gross and net income. For salary or wage earners, the gross earning would be the total amount of compensation that a person receives, which may include salary, commission, and overtime pay. That is before deductions. On the other hand, net earnings would be gross earnings less the deductions made on the compensation. So the gross earnings don't have any deduction, and then the net earnings would be gross earnings less the deductions. The deductions would be or would include the following: the standard deductions that are required by law for employees in private-owned companies. Some of these are contributions to Social Security System or SSS. We have PhilHealth Insurance Corporation and Home Development Mutual Fund or the Pag-ibig Fund. Union dues are deductions made by the company for the union as agreed upon between the union and its members, but not all companies have labor unions. Other forms of deductions from employee wages are generally discouraged or disallowed. So we are going to focus on the standard deductions that is required by law or that are required by law for this video. SSS contribution. The Social Security System was created to provide private employees and their families with protection against disability, sickness, old age, and death. The Government Service Insurance System, or GSIS, is an equivalent system for Philippine government employees. So if you're working if you're working in a government agency, a government office, a department, then you have GSIS, or you have deductions for your government service insurance system. But if you're working for private companies, then your deduction would be SSS, or Social Security System. You would see here the new SSS contribution schedule, which was effective April 2019. So this schedule is for the employed, self-employed, voluntary member, and non-working spouse. On the first column, you would see here the range of compensation. You have the monthly salary credit. You have the ER, which stands for employer's contribution, and this EE stands for employee's contribution. This would be the total contribution. So you have EC stands for employees compensation program, and then you have here also the computation for your total contribution and your monthly salary credit and SSS contribution. Later on, we're going to discuss in details how to use this table. Another deduction on the salary would be the PhilHealth contribution. PhilHealth contribution is a fund that provides employees with assistance in cases of hospitalization of the employee or his or her dependents. A big portion of the member's hospital bill may be charged to PhilHealth, thereby giving relief to the members who are hospitalized. It is required, however, that contributions for the last 6 months prior to hospitalization should have been made to avail of PhilHealth benefits. Those employees who have who gives PhilHealth contribution, if they have to be hospitalized or one of their dependents have to be hospitalized, then they can charge part of their hospital bill to PhilHealth. Now, this is the new premium contribution schedule effective December 7th, 2019. So for this year, that's 2021, the monthly basic salary, if it is 10,000 or 10,000 to 69,999.99 cents or 70,000, the premium rate would be 3.5%, and the monthly premium would be equivalent to this. So we'll have a separate discussion on the computation of your PhilHealth contribution. HDMF or Pag-ibig contribution. HDMF fund or Pag-ibig fund is used by members who wish to avail of a housing loan which is payable in 10 or 7 years. The total contribution with interest is returned to the member upon his retirement. The maximum monthly contribution is 100, which is matched by the employer, allowing the member to double the amount credited to his name. It means that if the employee is going to be deducted with this amount from from his salary. He will have like 100 peso contribution for the Pag-ibig fund. Then the employer would also give 100 pesos to match this contribution. So monthly, the maximum amount of monthly contribution would be 200. 100 from the employee and 100 from the employer. The contribution rate of all members, except for non-working spouses of Pag-ibig members, shall be as follows. So if your monthly compensation is 1,500 and below, the employee is going to give only 1% of the salary. And then if there's an employer, then the employer would be giving 2% of the monthly compensation as pag-ibig contribution. And then if the salary or the monthly compensation is more than 1,500, the employee should give 2% of the compensation as pag-ibig contribution, and the employer would also give the same amount. It is detailed in here. Monthly compensation shall refer to the basic salary and other allowances, where basic salary includes, but is not limited to, fees, salaries, wages, and other similar items received in a month. So that's how you would compute the monthly compensation or the inclusions of the monthly compensation. It shall mean the remuneration of earnings or earnings, however designated, capable of being expressed in terms of money, whether fixed or ascertained on a time, task, or piece or commission basis, or other method of calculating the same, which is payable by an employer to an employee, by one person to another under a written or unwritten contract of employment for work done or to be done, or for services rendered or to be rendered. So basically, this is just the definition of your monthly compensation and what would be included in the computation of your monthly compensation. Now, the maximum monthly compensation to be used in computing the employer contribution shall not be more than 5,000. And then, just like what I said earlier, the employer shall remit 2% of the monthly compensation of the contributing member as counterpart contribution. We also have the withholding tax deductions. As stated earlier, minimum wage earners are exempt from paying taxes. If you are a minimum wage earner, you don't have to pay for withholding tax. Those who are paid more than the minimum wage may compute for their monthly withholding tax deduction based on the withholding tax table issued by the BIR or Bureau of Internal Revenue. SSS, PhilHealth, and Pag-ibig contributions, deductions for absences and tardiness, and excess de minimis benefits for the month, if applicable, must be deducted from the gross income before the withholding tax can be computed. So if you already computed for the gross income, you have to deduct the standard deductions, including the absences, the tardiness, and also the excess de minimis benefits. This is because the government does not tax an individual's gross income, and instead the income tax is based on one's taxable income. So it is computed by deducting the contributions, the standard contributions, from a person's gross income. We have here the taxable income is the basis for determining one's income tax. That's the taxable income. Gross income includes all the income as salary, allowances, commissions, and all the earnings that he received. And then contributions would be the standard contributions, SSL, PhilHealth, and Pag-ibig contribution. There is this withholding tax table that we're going to use to compute for a person's tax deduction.